Hello dear students, myself CMA Padmaja Buzruk. I will discuss accounts of joint stock companies. Please go to study note number 1, accounting of shares and debentures. I will explain forfeiture of shares and reissue of forfeited shares. When a shareholder fails to pay calls, the company may forfeit the shares. That is, company seizes the shareholder shares on which he has not paid call money. If default is made by shareholder in paying the amount due on shares, then company sends him reminder letter. But still if he does not pay, then company seizes his shares and the amount already received by company from this shareholder, company won't return it back. Company won't return the amount received from him. It is company's profit. This is known as forfeiture of shares. Shares once forfeited becomes the property of company and may be sold on such terms as directors think fit. So forfeited shares is company's property. Company can sell these shares. Upon forfeiture, the original shareholder ceases to be a member. That is, the original shareholder no longer be member of the company, shareholder of the company, and his name must be removed from register of members. So, we'll see one example where company forfeits the shares. X company has forfeited 100 shares having face value rupees 10 for non-payment of first and final call rupees 2 per share. Company has called entire face value. Face value of share is 10. Company has called entire 10 rupees, but the person has not paid first and final call rupees 2 per share. He was having 100 shares, so company has forfeited his shares. He has not paid rupees 2 per share, that means 10 minus 2, 8 rupees per share he has paid. That means company has received 800 on these forfeited shares, which is company's profit, which is to be transferred to shares forfeited account. Journal entry on forfeiture of shares. Just now we have seen one example, journal entry for this. Share capital account debit 1000, company has forfeited 100 shares. 10 rupees on that is called. So 100 into 10 is 1000. Two calls in arrears. Final call money has not paid, it is due. This is default on payment of final call on 100 shares at the rate of 2. So calls in arrears account 200, 100 into 2, amount not received on forfeited shares. 2 shares forfeited account 800, capital received on forfeited shares. Face value is 10, 2 is not paid, so 8 is paid, 8 is received from shareholder on forfeited shares. Reissue of forfeited shares. Company can reissue these forfeited shares, that is, again can sell these forfeited shares either at par or at premium or at discount. Forfeited shares may be reissued by company directors for any amount, but if such shares are issued at discount, then the amount of discount should not exceed actual amount received on forfeited shares. Now we have seen one example. Company has forfeited 100 shares and on that it has received 8 rupees per share, that is total 800 rupees company has received. These 100 shares company can reissue, but maximum amount of discount which company can give on these reissued shares is 800 rupees. Discount amount should not exceed actual amount received on forfeited shares. The purchaser of forfeited reissued shares is liable for payment of all future calls duly made by the company. If company has forfeited the shares but some of the calls are due, then in that case the purchaser of reissued forfeited shares is liable to pay the future calls. Now we'll see one example on reissue of shares. X company had forfeited 100 shares having face value 10 for non-payment of first and final call 2 per share. Company has called entire face value. Company has forfeited these shares for non-payment of first and final call. All these forfeited shares are reissued at 5 per share. Discount on reissue of forfeited shares is 500, which is to be transferred to shares forfeited account. Face value of shares is 10. Company is reissuing these 100 forfeited shares at rupees 5. So 10 minus 5 is 5 rupees discount on reissue of forfeited shares. Total discount is 100 into 5, 500, which is to be transferred to shares forfeited account. Now this journal entry is to be passed for reissue of forfeited shares at discount. Bank account debit 500 because all 100 forfeited shares are reissued at rupees 500 into 5. Discount gets transferred to shares forfeited account. Shares forfeited account debit 500, 100 into 5 to share capital 100 into 10, 1000. Now if you see in forfeiture entry you have debited share capital and in reissue entry again you are crediting share capital. Whatever shares company had forfeited again it has reissued. Journal entry for transferring profit on reissue of forfeited shares. Shares forfeited account debit to capital reserve. 800 minus 500. In forfeiture entry, we have credited shares forfeited account with 800. In reissue entry, we have debited shares forfeited account with 500. All forfeited shares are reissued. So the difference in shares forfeited account gets transferred to capital reserve. So in short, I will explain this to you. Company has forfeited 100 shares on which it has received 800. Company has reissued these shares on which it has received 500. So 800 plus 500 total 1300 company has received on these 100 shares. But share capital account is only 1100 into 10. So 300 rupees extra whatever company has received is company's profit. It is capital profit which gets transferred to capital reserve account. Now we'll see what is the meaning of surrender of shares. Sometimes what happens, a shareholder is not able to pay call money because of having financial difficulties. Then he requests company to cancel his shares. He returns his shares to the company, which is known as surrender of shares. After the allotment of shares, sometimes a shareholder is not able to pay further calls and returns his shares to the company for cancellation. Such voluntary return of shares to the company by shareholder himself is called surrender of shares. Surrender of share has no separate accounting treatment, but it will be like that of forfeiture of shares. So whatever journal entries you pass for forfeiture of shares, same journal entries you have to pass for surrender of shares. Same entries will be passed in case of surrender of shares. Now we'll see various journal entries for forfeiture of shares. Journal entry for forfeiture of shares issued at par. If shares are issued at par and they are forfeited for non-payment of call money due, then entry is share capital account debit, number of shares forfeited multiplied by called up value per share. To call scenarios account, amount not received on forfeited shares. To shares forfeited account, capital received on forfeited shares. This is the journal entry for forfeiture of shares issued at par. Journal entry for forfeiture of shares issued at premium and premium money on forfeited shares is received by company. So if premium money is received by company on the shares which company has forfeited, then in that case you don't have to bother about securities premium account. securities premium account would come into picture in your forfeiture entry. In that case, your journal entry would be share capital account debit, number of shares forfeited into called up value per share. To calls in arrears account, amount not received on forfeited shares. To forfeited shares account or shares forfeited account, capital received on forfeited shares. Next is journal entry for forfeiture of shares issued at premium and premium money on forfeited shares is not received. If company has not received securities premium money on forfeited shares, then in forfeiture entry securities premium account is to be debited. See the journal entry. Share capital account debit. Number of shares forfeited multiplied by called up value per share. Securities premium account debit if issued at premium and premium not received. This is very important. Securities premium account is to be debited in forfeiture entry if and only if shares are issued at premium and premium money is not received. To calls in arrears account, amount not received on forfeited shares. To shares forfeited account or forfeited shares account, capital received on forfeited shares. Journal entry for reissue of forfeited shares at par. If these forfeited shares are reissued at par, then entry is bank account debit to share capital. Number of shares reissued multiplied by par value which is received. Bank to share capital. This is the entry for reissue of forfeited shares at par. Journal entry for reissue of forfeited share at discount. Bank account debit. Number of shares reissued into reissue price. Shares forfeited account debit. Number of shares reissued into discount on reissue. To share capital account. Number of shares reissued into paid up value per share. So this entry is very important. If reissue of forfeited shares is at discount, then discount gets transferred to shares forfeited account. Journal entry for reissue of forfeited shares at premium. Bank account debit, number of shares reissued into reissue price per share. To share capital account, number of shares reissued into par value per share. To securities premium account if reissued at premium. Reissued at premium is if the forfeited shares are reissued at a price which is more than face value. Then the amount which is over and above face value gets transferred to securities premium account. Journal entry for transferring profit on reissue of forfeited shares. Shares forfeited account debit to capital reserve. This we have already seen in example. Profit on forfeiture minus further discount on reissue of shares. Shares forfeited account you have to credit in forfeiture entry and same account you have to debit in reissue entry if it is reissued at discount, and the difference in shares forfeited account gets transferred to capital reserve if all the shares forfeited are reissued. Now we'll see when all forfeited shares are not reissued. When all forfeited shares are not reissued, then it is desirable to spread the amount of shares forfeited account on all such forfeited shares and the amount relating to that part of forfeited shares which has been reissued. Discount on reissue of shares should be deducted from such amount and balance is transferred to capital reserve being capital profit. Amount relating to that part of shares forfeited account which has not been reissued should be shown on the liabilities side of the balance sheet as shares forfeited account. In the example which I have given you, we have seen that 100 shares are forfeited and entire 100 shares are reissued. But if some part of shares are only reissued, all the shares forfeited shares are not reissued, then you have to be very, very careful. Proportionate profit only gets transferred to capital reserve. and shares forfeited account which has account which is having credit balance for the shares which are not reissued is to be shown on the liabilities side of balance sheet. I will show you how it is to be calculated. If part of forfeited shares are reissued, then profit shall have to be calculated proportionately as follows. Total profit on forfeiture of shares divided by number of shares forfeited into number of shares reissued. So, total profit on forfeiture of shares, this you will get in forfeiture entry, amount received on forfeiture of shares divided by number of shares forfeited. You have to multiply it by number of shares reissued minus further discount on reissue. On reissue of forfeited shares, if they are reissued at discount, discount amount gets transferred to forfeited shares account. That is to be deducted from this and the balancing figure gets transferred to capital reserve. We'll see one example so that it will be very clear to you. Same earlier example will continue. X company had forfeited 100 shares having face value 10 for non-payment of first and final call 2 per share. Company has called entire face value. Company has forfeited these shares for non-payment of first and final call. 50 of these forfeited shares are reissued at 5 per share. So company has forfeited 100 shares but reissued only 50 shares at 5. Now we'll see the entries for this. Journal entry for forfeiture of 100 shares. We have already seen this. Share capital account debit 1000. To call scenarios, amount not received on these shares 100 into 2. 2 shares forfeited account, amount received on forfeited shares 100 into 8. Only 50 forfeited shares are reissued. Journal entry for this reissue of 50 forfeited shares is bank account debit 250. They have reissued it at 5 rupees, 50 into 5. Shares forfeited account debit 250, discount is 5, 50 into 5. To share capital 50 into 10, 500. Journal entry for transferring profit on reissue of forfeited shares. This is very, very important. Shares forfeited account debit to capital reserve 400 minus 250 is 150. Now we have seen this. I've told you if entire shares forfeited shares are not reissued, then proportionate amount of profit gets transferred to capital reserve. We have seen this table. Total profit on forfeited shares upon number of shares forfeited into number of shares reissued minus further discount on reissue, difference gets transferred to capital reserve. Now if you see here, 800 divided by 100, on 100 forfeited shares 800 was received, so 800 divided by 100 into 50, number of shares reissued are 50, so it is 400. Discount on reissue is 250. Reissue entry, we have transferred 250 to shares forfeited account. Difference is 150, which gets transferred to capital reserve. Now your shares forfeited account will show a balance of 400 rupees. For 50 forfeited shares which are not reissued, this shares forfeited account balance 400 is to be shown on the liabilities side of balance sheet. We'll see few more examples we'll see now. ICC Limited forfeited 200 equity shares of 10 each, fully called up for non-payment of final call at 2 per share. These shares were originally issued at discount of 10%. Application, allotment and first call money per share at the rate of 2, at the rate of 3 and 2 respectively were received in time. Give journal entry for forfeiture. Face value of share is 10. Final call rupees 2 is not received. Shares were originally issued at discount which is 10%. Shares were issued at 10% discount. 10% of rupees 10 is 1 rupee. Therefore, issue price is 10 minus 1 rupees 9. They have received on application allotment and first call 2 plus 3 plus 2, which is equal to 7 rupees they have received, which will get transferred to shares forfeited account or forfeited shares account. Amount not received is final call 2 per share, which gets transferred to calls in arrears account or final call account. We'll see journal entry for this. Equity share capital account debit 2200 into 10. 200 shares are forfeited. Entire 10 rupee face value is called up. To equity share final call 200 into 2, which they have not received. To forfeited shares account 200 into 7, 1400. To discount on issue of shares 200 into 1, 200. This 400 is wrongly printed in the book. Make it 1400. They have received 7 rupees, but they have not received final call money 2 rupees. So 200 into 2, 400 is to be transferred to equity share final call or calls in arrears, and whatever money they have received gets transferred to forfeited shares account. Originally, shares were issued at discount. So discount on issue of shares, rupee 1, 200 into 1, 200. That is how you are supposed to show this journal entry. We'll see one more example. ICC Limited forfeited 500 equity shares of 10 each fully called up, which were issued at premium of 20%. Amount payable on shares were application 2, allotment 5, first and final call 5. Only application money was paid by shareholder in respect of these shares past journal entries for forfeiture. Only application money was paid. So shareholder has paid only application money. He has not paid allotment, first and final call. That means he has not paid securities premium. When securities premium is not paid, it is to be debited in forfeiture entry. Shares were issued at 20% premium. Therefore, issue price is 10 plus 2, which is equal to 12. Why 10 plus 2? 20% of 10 is 2. Only application money is received at the rate of 2 per share, which gets transferred to forfeited shares account. Not received is allotment rupees 5, final call rupees 5. So whatever is not received either gets transferred to allotment, first and final call or calls in arrear. Securities premium has not been received, therefore it will appear in forfeiture entry. This I have already told you. See the entry. Equity share capital account debit 500 into 10. Number of shares forfeited into amount called up. Securities premium account debit 500 into 2, 1000, because shares are issued at premium and securities premium is not paid. To equity share allotment account 500 into 5. To equity share final call 500 into 5. Both 2500. Instead of these two, you can call it as calls in arrears 5000. That also can be done. To forfeited shares account 500 into 2, 1000. This is amount which is received on forfeited shares, which gets transferred to forfeited shares account. Now we'll see illustration 20. So first sub-question of illustration 20, give journal entries for the following. PK Limited forfeited 10,000 equity shares of 10 each for non-payment of first call rupees 2 and final call 3 per share. So out of 10 rupees, 2 plus 3, 5 is not paid. That means 5 is paid. These shares were reissued at a discount of 3 rupees 50 paisa per share. Face value is 10, discount is 3 rupees 50 paisa, so 10 minus 3 rupees 50 paisa, 6 rupees 50 paisa company has received on reissue. Equity share capital account debit 10,000 into 10, 1 lakh. Number of shares forfeited, 10,000. Amount called up is 10. To call scenarios, 10,000 into 5. To forfeited shares account, 10,000 into 5. 5 rupees is in arrears, which will go to call scenarios account. 5 rupees is received, which will go to forfeited shares account. Bank account debit 10,000 into 6.50. Shares are forfeited, shares are reissued at 3 rupees 50 paisa discount. That means company has received 6 rupees 50 paisa per share. Bank account debit 65,000. Forfeited shares account debit, this is discount. Discount on reissue of forfeited share gets transferred to forfeited shares account. 35,000. To equity share capital 1 lakh. See, equity share capital 1 lakh debit, 1 lakh credit. Forfeited shares to capital reserve. 10,000 shares are forfeited, 10,000 shares are reissued. So, the balance in forfeited shares account gets transferred to capital reserve. 50,000 minus 35,000. Forfeited shares to capital reserve. 15,000. Sub-question 2 of illustration 20, give journal entries. KP Limited forfeited 20,000 equity shares of 15 each, including rupees 5 per share as share premium. So this breakup is 10 plus 5 as 15. 10 capital, 5 premium. For non-payment of final call, 3 per share. Out of this, 10,000 shares were reissued at a discount of 4. 20,000 shares are forfeited, 10,000 shares are reissued at 4 rupees discount. That means company has received 10 minus 4, 6 rupees per share. Only final call is not received. Shares are issued at premium and premium money is received. So in forfeiture entry, securities premium account won't come. Only final call is not received. 3 rupees is not received. So 10 minus 3, 7 rupees is received. Equity share capital account debit 20,000 into 10, 2 lakhs. Two call scenarios 20,000 into 3, which is not received. Two forfeited shares 20,000 into 7, which is received. So on 20,000 shares, 7 rupees is received. So 1,40,000 will go to forfeited shares account. 60,000 is not received. 20,000 into 3, which is not received. Final call will go to call scenarios account. Equity share capital account to be debited with 2 lakhs. Out of this 20,000 forfeited shares, only 10,000 shares are reissued at 6. So bank account debit 10,000 into 6, 60,000. Forfeited shares account debit 10,000 into 4, 40,000. This is discount on reissue of forfeited shares. Equity share capital 10,000 into 10 is 1 lakh. Figures are jumbled up. Now, you have to be very careful while transferring profit to capital reserve. 1,40,000 which you have credited to forfeited shares account is for 20,000 shares. But you are reissuing only 10,000 shares. So find out proportionate amount of forfeited shares account 40,000 divided by 20,000 into 10,000. For 20,000 shares, it is 1,40,000. So for 10,000 shares, it is 70,000. 70,000 minus 40,000 is 30,000. 30,000 gets transferred to forfeited shares account. Forfeited shares to capital reserve would be 30,000. Figures are jumbled up. You have to be very careful. Third sub-question of illustration 20. Give journal entries for the following. KP Limited forfeited 15,000 equity shares of 15 each, including 5 per share as premium, for non-payment of allotment money rupees 8 including premium, and first and final call rupees 5 per share. Out of these, 10,000 shares were reissued at 14 per share. 15,000 shares are forfeited, 10,000 shares are reissued. Reissue at 14 above face value. 15 is 10 plus 5. Reissue is at 14, above rupees 10. So 4 rupees is securities premium. Reissue is at premium. And see here, shares are forfeited shares are issued at premium and premium amount is not paid. So securities premium account will have to be shown in forfeiture entry. Equity share capital account debit 15,000 into 10. Number of shares forfeited 15,000. Amount called up is 10, 1,50,000. Securities premium account debit 15,000 into 5, 75,000. Why securities premium account has appeared in forfeiture entry? Because shares are issued at premium and securities premium is not paid. Call scenarios 15,000 into 13, 1,95,000 which is not paid. To forfeited shares account 15,000 into 2, 30,000 which has been paid. See what is given here. For non-payment of allotment and first and final call. 8 plus 5, 13 rupees is not paid out of 15. So only 2 rupees is paid. Whatever is paid will go to forfeited shares account 15,000 into 2, 30,000 and 1,95,000 is not paid. That will get transferred to call scenarios account 15,000 into 13. Out of these 15,000 shares, 10,000 shares are reissued at 14. So bank account debit 10,000 into 14, 1,40,000. To securities premium account 10,000 into 4, 40,000. To equity share capital 10,000 into 10, 1 lakh. In the reissue entry, there is no question of forfeited shares account because shares are reissued at premium. Forfeited shares account will appear in reissue entry if and only if forfeited shares are reissued at discount. Now this 30,000 which you have transferred to forfeited shares account is on 15,000 shares. On 15,000 if it is 30,000, on 10,000 how much? That you have to calculate and that gets transferred to capital reserve. 30,000 divided by 15,000 multiplied by 10,000 is 20,000. So forfeited shares to capital reserve is 20,000. Properly you have to check the figures. All figures are jumbled. So in this particular video we have seen what is the meaning of forfeiture of shares, reissue of forfeited shares, and we have gone through journal entries of forfeiture and reissue of shares with few examples. Thank you.